The UK housing sector, both private and public, is of critical importance to the British economy, with much investment wound up in the industry. And with a weakening economy and Brexit very much upon us, how does this change things, and where should we be within the housing sector if we want to get an investment return? Well, I'm talking now to the investment advisors to the FTSE 250 listed Civitas Social Housing plc. The CEO, who sits beside me here, is on the investment panel, is Paul Bridge, and Director Andrew Dauber is also with us this morning. Gentlemen, good to talk to you. Thanks indeed for coming in. In fact, you come in at an interesting time because you've just undertaken a deal, which I'd like to talk to you about in just a minute. But first of all, your fund is yielding some 5%, a pretty impressive yield. First of all, Paul, explain to us exactly what the investment proposition is here.
Well, good morning. Civitas Social Housing is a real estate investment trust established in 2016. We're listed on the main market of the stock exchange. We're a FTSE 250 company, and our primary investment strategy is to house people in England and Wales who require social housing. To date, we've invested over £770 million in housing people who have a care need, who require housing in the community, typically with a learning disability, autism or other care need.
You say you're a REIT, a real estate investment trust. How does that work, and what are the benefits of that for the investor?
Well, it's a closed-end fund, and it means that it's an evergreen fund, so we buy assets to house people for multi-decades, and the benefit for the investor is a sensible return, a safe return, and obviously a tax-efficient vehicle.
Andrew, let's bring you in now with some more detail on the investment strategy, and of course this acquisition you've announced this morning of some 85 million sterling. Explain what your investment proposal is, because as Paul was saying, clearly you've got a specific sector of the housing need within the country, which appears, as Paul was saying, to be relatively long in terms of tenure and relatively young as well in terms of individual.
Absolutely. So the audience we address, we believe, is approximately 500,000 people, and it cuts across care needs, but it also cuts across things like housing people who are homeless, key workers, asylum seekers, people with dependency. And so the proposition is essentially to support local authorities in that provision, but in doing so to enter into leases with our counterparties where we can offer our investors visible long-term income. So last year we paid a 5 pence dividend, which if you relate it to the share price at IPO, which is £1, would be 5%. This year we've said already that we're aiming to have that grow, at least with inflation. And so you've got a long-term stable income, and hopefully you've got an asset-backed investment, because obviously we own the freeholds of all these properties, over 600 properties, and we believe they will grow in value over time as well. So, you know, that's the core. So it's a low-risk, predictable investment. That's what we're aiming for.
And this acquisition or this deal you've done, which you announced today, how much does that grow the company?
Quite significantly, actually. It grows the rents by 10%, so our run rate rental income now is £45 million. And what we said at the outset is that once we've invested the equity, which we now have, and the debt that goes with it, we'd be aiming to get towards, and this is not a forecast, it's just if you calculate the math, around about £1 million a week. So we're well on the way to achieving that, and that underpins the dividend, because one of the key things we want for the dividend is to be able to pay it from income. So we're not paying people their own capital back in order to pay them their dividend return each year, and we're very much on track with that.
Paul, any more deals like this in the pipeline? Is this the way you want to expand the business?
Absolutely. As Andrew was saying, and we have primarily focused on those with care needs, but we are also buying portfolios and housing for those with addictions, stepping down from the NHS, key workers, and other parts of the social housing market. It's obviously a very large market. I mean, there are 4 million people waiting for social homes as we sit here today, and many hundreds of thousands of families requiring permanent, long-term quality accommodation.
So the income from the rental side of it comes through from just local authorities?
Absolutely, and the advantage is that better social outcomes, so people who don't have to move move often, have long-term secure quality homes. It means that if you're a family, you don't have to keep changing your schooling, changing your GP, changing your community, but also the cost is significantly less. Obviously, if local authorities are paying for temporary accommodation, they might be deploying that into hostels or other temporary accommodation, which is poor social outcome and expensive.
Yeah. Andrew, you mentioned the share price. Let's bring up the share price, because I think it's interesting in the context of what we've been talking about. And you're talking there in the context of the yield, currently trading at 96 pence. And I think that the company was launched at £1, wasn't it? So that 5% yield is benchmarked against £1. So anybody obviously buying into this will get slightly more than 5% yield if you're buying at the share price. How important is the share price to you as investment advisors to Civitas?
It's really important. I mean, obviously, we want all our investors to do well. I mean, the cornerstone of the investment is the regular income flow, and I think we've been very much on track with that. At the same time, we do believe there's a capital growth opportunity here. We've seen some volatility in the share price, and I think it's probably fair to say that the sector is still relatively young, and so people are still getting an understanding of it. And we think actually as that understanding grows, then we would expect the share price to grow if we deliver fundamentally on the ground, which we believe is what we've been doing.
Are you exposed in any way, shape or form to what's going on in Brexit at the moment?
Only by watching the television, not in any financial sense. This is a UK investment. It's all in sterling. We're dealing with issues in the UK, but we do go to Europe. We've been talking to institutional investors in Europe and actually been looking at the situation in Europe. And there are many similar themes of high-priced housing, a lack of affordable housing, people wanting to be cared for in their community near where they've grown up. Those issues are common across much of Europe, and so what we're doing in the UK is being mirrored in different European countries, which is quite interesting.
Paul, how do you see the future potential growth prospect for the company?
Well, one of the things about Civitas is we've established a multidisciplinary team from different sectors, from healthcare, from social housing, obviously from real estate and financial services. I think we're the largest team of that type today, and that gives us an opportunity. We're now working in over 160 local authority areas. Local authorities are asking for accommodation for all the types I mentioned earlier. So there are big growth opportunities, and importantly, this is social impact investing. So our partnership with Crisis, the homelessness charity, and other charities is giving us the opportunity to really push hard on providing high social impact housing.
So where do you see the company within a year? I mean, you've already said that Brexit doesn't really have a direct impact, but one other aspect does, I guess, and that's the slowdown in the economy, the drop in house prices, the drop in property prices generally, but the low interest rate environment. How does all this help or hinder Civitas?
Well, I think it's very clear that long-term demand will be there for housing for those with care needs, for wider housing for people who can't afford to buy their own homes. Low interest environment is obviously an opportunity for all of us to provide more housing. Obviously an opportunity for investors to benefit from the success of the fund. And we're very confident that we can continue to work in partnership across the country with local authorities and housing associations, care providers and charities to provide much more.
Yeah, and within a year's time, where do you see the company? Having done more deals like this one this morning?
Absolutely. We'd like to keep doing large institutional deals like this, of very high quality properties. And because we have such excellent contacts and links now, and I think we've got a very good reputation for being a social impact investor, more and more institutions will want to work with us to do these type of transactions. OK, well, look, gentlemen, I have to leave it there, but thanks indeed there for joining us. That's the Chief Executive of the investment panel of Civitas Social Housing, Paul Bridge, and Director Andrew Dauber.